Hello, mortgage broker community. Welcome to another weekly Wednesday National Broker Sales Meeting. Thank all of you for taking the time to attend. We got a great 30 minutes ahead. We have Barry Habib coming in with a market update, providing some insights into what's going on with interest rates, what's going on with the real estate market. A lot of value there. And we also have Rene Rodriguez coming back, talking a lot about sales tactics, how we're representing ourselves, how we can do a better job of building relationships and growing our business. So want to get started first and foremost. Had a ton of calls this week with different brokers from all over the country, and I'm hearing the same story from brokers, from LOs, from retail LOs. It's the same story. Everybody's having a great year. Everybody's having probably what's going to be the best year of their career. And what I want to stress to everybody is to understand that why are we having our best year ever? Some of us have built great businesses and some of us are still building great businesses. But I think the focus that we all need to have is focusing on building for the future. It's easy right now. 2020 is going to be a record year for the mortgage industry. Everybody is going to do well. There's not one loan officer out there that's going to have a year that was worse than last year. Everybody's going to be growing this year. But understand this, when rates go up, that kind of tells the story of 2020. Were you focused on building your business by developing relationships, by building a business that wasn't just strictly benefiting on refis? Or are you in a situation where you made those investments, you developed those realtor relationships, you went out and you won more new relationships? And that's going to be what determines who wins 2020. If you think winning May of 2020 by closings and fundings is the key, it's not. Believe me when I tell you, at the end of this rate rally, at the end of this cycle, we're going to be in a situation where certain people are going to see a 50 to 60% contraction in their business right away. Bam, refis are gone. And we all are going to see a contraction in refis. But the question is, have you built a core business? Have you grown your core business, or did you get completely focused on refis? Did you get completely distracted on what's in front of you now and forget completely what the opportunity is ahead of us? So are you talking to real estate agents? Are you working on building your team, your LOA, your processors? The number one post over the last week in the Brokers Are Better Facebook group has been about hiring processors, finding contract processing companies, hiring LOAs. Those are the top 3 threads for the whole entire week, and we get hundreds of threads per day. So what does that tell me? It tells me that not a lot of people have invested in training and developing people on their team. And that's the secret to success. That's the secret sauce. So what I want everybody to have as a takeaway this week, and it's really the takeaway that we've had every week, is making sure we're focused on 2021, 2022, and 2023. Yes, capture the business that's in front of you now. Don't lose out on this opportunity. Run the playbook run the plays that make sense right now. But just understand that when refis go away, when rates go up, at the end of 2016, after the election, we saw the 10-year Treasury sharply move up 150 basis points. And what happened? A market that was 53% refi went to 90% purchase, but only after the size of the market decreased by 1/3. So don't be in that position where you became singularly focused just on refis. Make sure you're building, you're diversifying, you're talking to more real estate agents, you're talking to more referral partners, and you're growing for the future. That's going to be the secret for success. Now, the one major thing that I want to talk about, we hit on it last week with mortgage broker market share growing to 19.3%, the highest it's been since prior to the financial crisis. Huge gains. But why is it growing? And the core reason it's growing is, yes, we have more loan officers coming into the channel. We have brokers growing their business. We have brokers hiring and expanding their operations. That's part of it. The other part of it is the fact that in 2017, when we started the Brawl movement, which turned into this great trade association, we routed the entire principle of wholesale lending. And this is something that's really important because the data is overwhelming with what the impact has been on mortgage brokers' businesses. And when I say that, in 2017, which was the last year prior to us coming out and outing Brawl or outing wholesale lending, brokers were only able to retain 14% of their previous customers on future transactions, just 14%. Today, that number, as an average among brokers that are working with true wholesale partners, is over 40%. So if you do a loan with a true wholesale partner, your ability to retain that customer is 40% versus with non-partners, with wholesale lenders, it's only 14%. So for new brokers or for LOs that are not familiar with what wholesale lending is, let me help you understand what it is, because it's really important and it's turned into a competitive advantage for the entire broker channel. So what is wholesale lending? Wholesale lending is lenders that have a primary business model in retail, not distributed retail, consumer direct retail, call center retail, that are focused on bringing in loans from brokers with the intention of repurposing those loans in the future for their own retail division, meaning refinancing those customers in the future. So the way they look at things is, hey, you broker a loan to us and we're going to close it, you're going to get paid, but the minute that you close that loan with us, that's our customer. That's how wholesale lenders think. And as a result of Brawl and as a result of all of the notoriety that came along with it, we were able to get a lot of lenders to change their business practices. And at the bare minimum, we were able to bring enough awareness to the subject that brokers understood who the wholesale lenders are and who the true partners are. So what I want to talk about also is how wholesale lenders price their loans, price brokers, put the right pricing they put in loans after the pricing they put on the rate sheet to make it appear like they're doing something better for the broker than a true partner. Now, the way wholesale lenders operate is this, is they know they're going to get the one loan from you and then they're going to refinance that customer 2 to 3 times in the future. So think about it. If you're them and you know statistically that's what you've been able to do for 10 years, why not pay the broker 0.5% or 100%, 50 basis points or 100 basis points better than a true partner lender? Because they're looking at it and saying that's customer acquisition costs. If I pay them an extra 50 bips, but on the second, third, and fourth transaction that we do for that customer, we're going to make a full 200 basis points or 300 basis points. Then it all makes sense. That's the economics behind wholesale lending is you pay extra to a broker to get the loan the first time, but in the future, the broker gets cut out of it and you refinance that customer 2, 3, 4 times and retain all of the compensation. And in a market like this, wholesale lending is exploding again. I can tell you this, we've been monitoring the data, and for the most of 2019, because of the awareness we brought to the subject, things were under control. But over the last couple of months, we've seen an explosion of wholesale lending. And it's really, really important that every broker understands the impact that this has on them. You might be looking at pricing a loan today and say, this is going to get an extra 50 basis points if I go with this wholesale lender versus this true partner lender. But just understand that in the future, when you go to refinance that customer, it's going to cost you that future commission because they will have already beaten you to that customer. Now, some brokers might say, hey, Anthony, rates are as low as they're ever going to be. This customer is never going to refinance again. Well, guess what? Back in 2016, after Brexit, I said the same exact thing. And guess how many of those customers refinanced since then? Almost all of them, okay? So most of those loans have paid off, whether they sold the home and bought a new home, whether they refinanced because rates are now lower than they were after Brexit, they've already refinanced. So just understand, it's not just about the rate that the customer gets right now that defines whether they're going to stay in that loan long term. It's understanding that life events happen. People take cash out. People sell their homes to upgrade to a bigger home. People sell their home to move for another job. These are all life factors that change the circumstances of the customer and create a new transaction. So don't get in the box of thinking like, hey, I'm doing this for the customer today, and this is the best they're ever going to get. Just understand, that's not actually the situation. The situation is customers do refinance, they do sell, they upgrade, they downgrade, they move. Make sure you understand, customer for life is a concept that we spend a lot of hard work, a lot of time and energy working with lenders, with our true partner lenders, on getting them to adopt business practices that support the broker community. So for lenders that are doing those things, which in order for AIME to be in a business relationship or in a sponsorship relationship with the lender, we vet them for an extended period of time in order to be able to make sure they're actually doing those business practices. Now, we find all the time, brokers will come to me and say, hey, Anthony, I got this situation where this specific lender is calling my client. And what we'll find out is this is, understand, if a broker takes a loan to one of our true partner lenders, and that customer's in their servicing portfolio from that broker, and that customer calls that lender, they're going to make sure the broker gets it. Now, if the broker didn't do the original loan with that lender, meaning hypothetically that lender bought the loan from a retail lender because they're buying servicing or correspondent loans in the secondary market, And now you're refinancing that client. That wasn't originally your customer. That was a retail lender's customer that sold the loan to that lender. So we have to be able to differentiate and apply common sense. But overwhelmingly, I can tell you, I work closely with the leaders of the consumer direct departments at these lenders. I work with the leaders of the wholesale divisions. The commitment is there. Things might go wrong from here and there, but we're talking about 3 years ago. Most of these loans, if brokers were only retaining 14% of it, the rest of them were all going back to the direct-to-consumer servicing wings of these lenders. If we're up to over 40%, that means we've over tripled the amount of customers that we've done loans for that we've been able to retain in future transactions. It's a big deal. It's very important. It's really important that every broker understands that it's not just about the price that's on the rate sheet. It's about the long-term commitment to the relationship with your customer. It's the future transactions that you're going to retain that is the real difference maker. So understand who your true partner lenders are. True partner lenders, they're providing trigger leads. They're providing notifications when a payoff gets requested. They're going to let you know if the customer calls the servicing department. And this week, we're going to highlight what lender has really done an amazing job since we partnered with them back in 2018 to announce their partnership offering. And that's Caliber Home Loans. We've worked with Chad Smith. We've worked with leadership there over the course of the last couple of years, the original leaders back then and the leaders today. And I can just tell you, the effort to make sure that this is a best-in-class program, that brokers get their past customers back, has really been executed on. Since this program was implemented in April of 2018, over 120,000 leads or past customers have been referred back to brokers. This year alone, 24,000 have been referred back to brokers, and of that, 3,500 customers that called their servicing department have been directly transferred to the original broker. Now think about that. Customers calling their servicing department at a wholesale lender, they're originating that loan, they're going to refi that customer, and they're calling it a day. With a true partner, they're referring it back to the broker. They're doing a direct transfer back to the broker. That's a big deal, guys. It's really important that we understand how big of a game changer that is. In retail and in correspondent, they don't have that. Unless the lender that the retail LO works for retains their servicing, they don't have that. Now, they might be in a situation where they are a retail LO at one of the lenders that we're talking about, and they have that feature. But if they're at a lender that sells their servicing, they have no control over it whatsoever. These lenders that we've worked with have 100% committed to the continuity between the mortgage broker and their past customers. So just understand that those economics, understand the importance of partnership. I know it's easy to get focused on what lender's at the top of Loan Sifter or who's pricing aggressively today, but understand you're part of a customer acquisition strategy at that point. They're not giving you the best price, they're buying your customer. And that's the differentiator that we all have to be aware of. I haven't hit on this messaging in a while, so I really want to make sure that everybody understands that this dynamic is in play. The numbers are growing. The wholesale lenders are doing more wholesaling now than ever before, and we have to be cognizant of this dynamic. So we have a great friend here today, President and CEO of MBS Highway. He's been an incredible partner to the broker community. He's been an incredible ambassador to the industry. I've asked him to come on today to really provide a market update. We haven't heard from him specifically on our AIME channel in a little while. Barry, Habib, how are you? How's everything going?
Oh, I'm doing great, man. Hope you guys are doing well. Great points you make, Anthony. And I'd like to add to that a lot of that has to do with your leadership. So congratulations. You've really been making an impact.
Well, thank you, Barry. The floor is yours, and the broker community is excited to hear from you.
All right. I might share my screen, just giving you guys a heads up, a couple of things I do want to point out. So listen, we're going to try and cover some things really quick. So put your mental roller skates on here. We're going to go fast. So I want to talk to you a little bit about your role as an advisor. I want to talk about where we see the economy and the jobs market, because that's such a big thing. Talk about interest rates and refinances, as well as the housing market. Now, we are going to be doing something a bit more grand scale on the 16th of this month. Anthony and Nicole will send out some information on that, and we'll cover this more in depth and things that you can share with your customers. So I'm pretty excited about that. I think you guys will really like it. But first, I want to talk about you. I want to talk about the fact that you're having a record month, or you've been having a record year, and you've been doing well. What are you doing with your money? Are you putting your money aside? Are you protecting yourself? Are you thinking for the future? Because part of it is planning your business, but the other part's planning your life. Are you doing that? I just want to give you a quick example, because the way you handle things for yourself transcends to your customer. We oftentimes, if we're taking measures and steps that we've learned to create wealth for ourselves, it makes us a better advisor to our customers. Think about this. You do somebody's refinance today and maybe you save them $200 a month. That comes out to whatever, $6.50, $6.60 a day, depending on how many days in the month. And that's nice. Sure, $6.50, but let's face it, what does $6.50 buy you? Does that make a difference in your life? Does that change anything in your life? So I want you to think about it in the grander scheme of things, of how we can do things that change our customers' lives, because that's what differentiates us from our competitors. That's what makes us an advisor. That's what takes price out of the equation. That's what causes you to win over and over and over again. And that's what causes that customer to want to come back to you and tell every single person they know about you. It's not your rate, because that will change. It's your advice. It's your guidance. It's the things that will literally change their life that they will get excited about. I was going to touch on one thing really quickly. So the first thing I want to do is I'm just going to share my screen just to show you how quickly it is. And I think that we're going to be able to see my screen. Is that something that you could see now? Can you see my screen? Or let me ask you guys, can you see that, Anthony? I'm assuming you can. Okay. So if we're good to go, here's the current market. I just wanted to point out one quick tool for you to look at. And it's a tool that we have called Retirement Calculator. And I want you to show you how easy it is, but I want you to think about yourself or your customer here. So start with you and kind of run through this for yourself. But think about this. If you have a client and they said, I sure would love to have a retirement income of $50,000 a year. And I'm 38 years old right now. That's kind of wishful thinking for me. I want to retire when I'm 67, and I've got $74,000 in my account saved. I think I'm going to get an 8% rate of return before retirement and a 5% return after retirement. It'll be more conservative. What do I need to save? I need to save $224 a month. So maybe in your consultation, if you're going to save them $200 or $225 a month, rather than them taking that money and blowing it, here's a great way for you to say, speak to your financial advisor or start packing this money away for yourself, and then you will hit your retirement goals. Maybe they say, well, what would happen if I wanted to go up a little bit? If I wanted to go to, let's say, 70,000. Well, we calculate that. We say, okay, well, that's 512. So, it's a little bit uncomfortable for me to do 512. Well, why don't we take $30,000 cash out and make this 104? And when we take $30,000 cash out on the refinance, that may be making it a little bit more palatable. So what this does, team, is it gives you the ability to really be that advisor for your customer and put yourself in a position where you're now not just doing a transaction, you're literally changing their life. And are you doing this for yourself? Is this something you're doing to protect your life, to make sure that you're in good position, whether things change in our industry? And I'm very, very optimistic about our future. Let's first talk about the general economy. There's a couple of things that are going on. You're going to be hearing more and more this week about jobs numbers. Now, the ADP number came out today, and it was pretty good. They estimated about 8.7 million jobs would be lost, came in about 2.7 million jobs lost. So 6 million off the number. They missed it by that much, like, Get Smart or Bob Uecker, just a little bit outside. Well, thing of it is that before we get too excited, estimates like this can be off. Every Thursday, we do a live update as far as what the unemployment rate is. The unemployment rate on Friday from the BLS is expected to be about 19 to 20%. But I don't want you to think that that's where we are right now. That's where we were kind of mid-May. And if you're on MBS Highway, which I know so many of you are, we called that exact number exactly in real time. Tomorrow, we'll give you the number. I estimate that it's going to be in that 14% range, 13% range. So when you hear that number on Friday, everybody's going to be talking about, 20% unemployment. That's where we were, not where we are. Where we are is closer to 15. I think by the end of the year, we get down to 10. Why is that so important? It's the overall economy is really important for us. And I think that, don't look at just the stock market. The stock market, I think, is not the best indicator. It's a little bit of a disconnect there, to say the least, as to where we are. When we take a look at the housing market in general, we think housing is going to be very, very strong. I want to talk to you a little bit about where you can be focusing your marketing efforts right now. We'll talk more about it on the 16th. But the big driver of home ownership right now is under 35 years old. So if you're thinking about under 35 years old, and we'll show you all the reasons why, there are ways that you can market to them. There are things you need to show your real estate agents. Average realtor is 58 years old. They think they're doing great on social media marketing because, oh, I'm all over Facebook. People under 35, their first choice isn't Facebook, it's Instagram, and realtors are missing the boat. What you can really do is be a great coach to your realtors in those situations. There's one more thing to touch upon quickly, and that's the interest rate environment. So I'm a little worried in the very short term that we might see a little bit of deterioration in prices just based on the technicals. But I do think that longer term, we're going to be in very good shape. There's a lot of downward pressure on rates. I'll show you why, and we'll talk more about that and what the amazing opportunity is in our industry right now. But you do have to think about this. 34% of homes that are owned are free and clear. That's great for move-up buyers. It's also great for people that are looking to pull cash out. The homes that have a mortgage on them, the average LTV is a 53. There's an average of $177,000 of equity. People could pull that money out, pay off debts, change their life. We'll talk more about that on the 16th, but there's a lot for you to be optimistic about going forward. Just remember to pay yourself first. There's a great book called The Richest Man in Babylon. Talks about that. Take some of the money you're making and pay yourself first as if it was a bill that had to be paid.
Barry, that is, so for everybody, we're going to be sharing on the AIME Facebook page and in the Brokers Are Better Facebook community. That's Tuesday, June 16th at noon Eastern time. We're going to do a 1-hour breakdown. Barry's going to go into everything that he previewed there. More than anything, Barry, biggest thing that we didn't talk about yet, and you're our featured vendor of the week, is, the MBS Highway partnership that AIME has with MBS Highway, provides discounted MBS subscription. But more than anything, times like this right now where, as Barry said, rates could go one way or the other, and it can happen very, very quickly. And he's warning everybody to make sure you're being cautious, make sure you're protecting your locks, make sure you're locking loans for the correct amount of time, but you're also, quoting and locking quickly. So, we're going to keep our eyes on that and make sure that we keep our membership informed. The MBS Highway is a key tool, not only to monitor the market, but to also make sure you're presenting everything to your customers in the most in the best way possible for them to understand their options, to understand the benefits of cash out, to understand rent versus own. So these are some of the tools that Barry will be going over on the 16th. So we appreciate you, Barry, taking the time with us. Now we have Rene Rodriguez. He has been working with us very closely for the last month. We're really excited about the content that he's been bringing to the team. I've gotten a lot of feedback from brokers on implementation of some of the takeaways that he's provided. So Rene, another great week here. We really appreciate you. Thank you for taking the time, and the floor is yours.
Thank you, sir. Thank you to Barry. Always great information. And Anthony, your leadership is something we're all looking forward to every week. I can't begin today without at least acknowledging the changes that have happened over the week. We are, again, using the term in another unprecedented time. The most important skill of a sales professional is to be able to be empathetic. That is a term that has been thrown around so often and so misunderstood and so overused, but now is the time that we have to actually go down and look at what it actually means. Gary Vee designed his entire wine collection around this term, empathy. What a lot of people confuse is that empathy does not mean agreement. If you understand, if you study the top negotiators in the world, the FBI negotiators, they're going to tell you they need to be able to understand somebody that thinks differently than they do. And right now, the entire world is in uproar. The entire world is fearful. And if you haven't seen my presentation on the courage scale, I highly suggest that you go look at that. I can provide a link for the Lighthouse series that we created. But in general, it's understanding that there's a line in how we feel. Above this line are things like openness, willingness, reason, logic, joy, peace, enlightenment, the thing that we all want. And then the thing below the line are fear, anger, apathy, guilt, shame, all the things that bring us below the line. A lot of your customers right now, a lot of your family members, people that you know, your Facebook friends, are below the line right now. And our ability to lead requires us to not be tone deaf to the realities of what's going on. There's nothing worse than being a bull in a china shop and not realizing that people might be scared, people might be upset. So if you don't know what to do, there's a great tool. It begins with your ears and just to begin to listen. And so I want to do a couple of things. But first, before I go in there, this concept of empathy is the number one rule of this profession. I can teach you the 6 money-making activities with PAPCAR and mix it with the presentation skill. If you do not have the skill of empathy to be able to stop with what your agenda is and to be able to live inside the heart and mind of your client, you're not going to sell for the long term. You might get a deal. You might get a transaction. You won't get a referral, and you will not build a long-term career. And I'd venture to say you just won't sleep as well at night. This is a noble profession. We have to bring the professionalism back. And in times like we are in right now, I urge you, I beg you, I plead with you to just listen, be empathetic. And if you don't know what to say, ask. And so I'm going to give you 3 tools that are going to apply to everything that you do in times of stress, in times of leadership, and with your clients. And there are these 3 words here: empathy, transparency, and authority. Now, we know, I just talked to you about empathy is the ability to understand, not feel. That's sympathy. We don't want sympathy, because sympathy, we lose sight of perspective. The ability to understand how somebody else might be feeling is the beginning of emotional intelligence, which we know is one of the biggest key measures for success. But our ability to understand where someone is at. So like, look, I understand that this is a scary time. I understand. I can only imagine how you feel. I've called all of my cop friends this week and just said, I can't even begin to understand how you feel right now. I have a black cop friend, and I said, I don't even know what you're feeling. You're getting attacked from all different sides. That is my way of caring. And this isn't a Facebook post. This is a phone call. Facebook is going to leave all sorts of room. I made the mistake of posting something around 2 headlines talking about framing from 2 different, and all of a sudden all the emotions went. That was a mistake on my part, because I should have known better that wasn't the best avenue to talk about that. And so I pick up the phone and said, how are you doing? What can I do? One of the most powerful things you can do is just lend the ear. Empathy. Transparency is a tough one. If you don't know what to say to a cop, if you have black friends and you're not black and you don't know what to say, if you're white and you don't know what to say, if you're black and you want to talk to somebody else, you don't know what to say, be transparent. I don't know exactly what to say. If you're talking to a client that is going through a death and you haven't been through a death, if you don't know what to say, be honest about that. If you're talking to a woman and you're a man and you don't know what that female experience is like, then you say, you know what, I don't know exactly what that's like. But the last part is authority, which is so important and needs to be understood. When you put all 3 of these together, that's when the true communication happens, when we say, I can't even begin to understand where it is that you feel. And let your heart speak on that empathy to be able to truly understand. And if you don't know, be transparent. I don't know what the future holds, or I don't know exactly how or what to say, or I'm scared because I might say the wrong thing. But the authority comes in, but I am sure about one thing, that I'm committed to learning. I'm committed to listening. I'm committed to growing. Those things, when you put them together, all of a sudden create a beautiful combination of being able to connect with people and to be able to begin the conversation of being able to move forward. So you're in the trenches of selling in a crazy environment right now. And so I urge you to be able to look inside yourself and find that empathy. I'm telling you, it's easy to be empathetic with those that you agree with. Nobody cares about that. It's easy to lead when times are good. Nobody cares about that. Can you be empathetic to somebody that has an opposing thought than you? That is your challenge for this week. And can you take that empathy and share your transparent thought in an empathetic way, and then show the authority that you are willing to learn and grow? Does not mean agreement. I'm not asking you to change your beliefs. I'm not asking you to change your values. And this goes to everybody here listening. Empathy, transparency, and authority. Remember those 3. Practice it. Listen, talk, pick up the phone and make those phone calls. Call your realtor partners. Use the tools that you've been given by AIME, because AIME is designed to give you these tools to help you be empathetic. And I'm telling you, with MBS Highway, the other thing that the brain needs to be right now is structure, order, and predictability. Name another tool that's better than that for that. So use the tools, be empathetic, show your transparency, but then show the authority that you're willing to learn and grow, and that you can create a path forward. So thank you, guys. We'll look forward to seeing you next week.
Rene, great message, very timely and really important for all of us. There's never been a time between shutdown this last week with everything that's been going on in the country. It's never been a better time to really take a step back and really think about how intentional we need to be, both as, from a standpoint of being understanding of everybody that's out there, but also take a step back and really not just assume what somebody's going through. So thank you, Rene. We really appreciate it.
Thank you, and thanks for the call that you gave me as well.
Yeah, absolutely. So a couple more things here, guys. We want to keep it to 30 minutes, so I'm just going to wrap up here. Two more things for you. Number one, featured broker of the week on the Broker to Broker podcast is Barb Multari. Barb is a superstar. She recently made the transition over the last couple of years from retail to the broker channel. She started her own brokerage. Her and her husband managed that brokerage together. Great people, have built a great business, and they're thriving. And this is a really great podcast. I listened to it yesterday morning. I highly recommend taking the time to listen to it. Next Wednesday, we're going to be announcing and releasing the AIME broker rankings. Now, the AIME broker rankings, just so everybody understands, this isn't about who's number one. This isn't about how much volume people are doing. This is about bringing authenticated data about brokers to the world and stamping our approval on it. So the days of people claiming they're a broker when they're not a broker. Last year we saw one publication came out with the top 200 brokers, and every broker saw that, and there was loan officers from Loan Depot, there was loan officers from New American Funding, there's loan officers from all these retail companies, and we're all saying, hey, these guys aren't brokers. So what we're coming out with is the top broker list. This is verified data. Yes, brokers submit their data to us, but we went out and we verified against multiple data aggregators. We want to make sure what we put out was truly authentic. And we separated it too. If you're a broker or a non-Del, we're going to separate those things out. We're going to make sure that everybody understands this is who we are. But for AIME moving forward long term, what this does is it creates an opportunity for us to tell the story of brokers to the media. In the local markets, in the national market, we want to be able to make sure consumers understand that mortgage brokers are not retail loan officers. We are a different animal. We are independent. And we want to make sure everyone understands the kind of volume that this channel, not an individual, not a company, is doing. So this is all about an opportunity for us to tell the story of the broker community, of the growth to consumers, to the national media, and also to lenders that might potentially be interested in joining the channel. So that's exciting. We're going to announce that and release that next Wednesday. And just to wrap up here, I hit on it at the beginning. Hiring is the answer, okay? We have a great run ahead of us, okay? Rates are going to be low. Even with that said, the minute that multiple states recently opened, what did we see? Purchase applications through the roof. There wasn't any stall whatsoever. The applications bounced back right away. Now's the time to grow, guys. Now's the time to focus on investing in your business. It's an LOA. It's a closer, it's a processor, it's another loan officer, or an LOA you're developing into a loan officer. I might say the same thing over and over, but I'm just telling you, this is the key to success. When I see loan officers posting, I need an experienced LOA, I need an amazing processor. Hey guys, the amazing processors are paid well and they're somewhere else and they're not coming to work for you. The amazing LOAs are paid well and they're staying where they're at. You got to invest in your business. You got to develop them. There are no superstar free agents out there that are just going to be like, oh yeah, I was just, hanging out, waiting to be an LOA in the middle of the biggest refi boom ever. That's not happening. You got to invest. So stop asking and stop searching for that wild card, or that unicorn that's going to emerge, and let's start just focusing on developing that person. 6 months ago, if you took that plan, today you'd have a trained LOA, you'd have a trained processor, you'd be able to do double the business that you're doing today. So think about that. Today's the day to take action. And somebody will say, well, Anthony, I don't have a hiring manager, I don't know even how to post an ad. It's this simple. You go on LinkedIn and you find a recruiter. And you pay the recruiter. When they find you a candidate and you like them, you pay them. Yes, there's a premium there, but they do all the work. You tell them what you want, you tell them who you want, and they'll deliver the candidate. And if you don't like them, then you fire the candidate. But just understand, recruiters will do all that for you. It's worth the money. It's the point of diminishing returns. You stay focused on your business, and in the meantime, you go out and hire that LOA, that processor. So everybody have a great rest of the week. We're going to have another weekly Wednesday sales meeting next week. Looking forward to hearing from everybody at the end of the week, and take it easy.